What's up, guys? I hope everyone's having an amazing day. I am, and I hope the same for you. In today's video, we're going to talk about the SPY, the NASDAQ, the IWM, and the crypto markets. So without further ado, let's get started with the video. So number one, the dollar. The dollar started to give back its gains a bit. We were seeing that it was trading outside of the upper level of the Bollinger Band, very overextended to the upside. I was saying that we would have a bit of a pullback. So this is that, right? But we can see that this doesn't mean necessarily just because we fell back into the Bollinger Bands that the dollar is not going to continue going up. So with the strength of the dollar currently, as long as the dollar continues showing this much strength, the stock market is going to continue showing weakness. But we saw that it needed a bit of a breather here. And we saw that the overall market also took a bit of a breather. So that is a pretty interesting correlation so far. To remain basically bullish, even if we fell down to like 107.77 or came back to even retest 107.5, this would still be a bullish structure on the dollar and not a necessarily huge warning signal for equities. So, yeah, regardless, this is still in a bullish uptrend on the dollar, and I just want to look at that to begin the video. Now let's go ahead and take a look at the bonds. So the bonds are continuing to show a lot of weakness, and today you could see that it closed very overextended to the downside. But as you can see, this was 3 closes in a row outside of the lower level of the Bollinger Bands. Things are starting to get a bit overextended to the downside on the bonds. So if we hit 4 days, if tomorrow we also end up closing outside of the lower level of the Bollinger Bands, then that would be a pretty, that would start to look like the bonds need to have a bit of a bounce back into Bollinger Bands. So we just looked at the dollar. The dollar similarly did that, right? But now we want to see if the dollar can fall down to support, and we want to see if the 30-year bond can retest levels of resistance. That's really it. As we continue seeing the weakness out of the 30-year bonds, we're going to continue seeing weakness out of the equities. Now, the first thing I want to look at on the SPY is that the Bollinger Bands are starting to get very tight. So usually when they get tight, right, and as price gets closer and closer to a tightening Bollinger Band range, there is usually an explosive move either to the up or the downside. So we have to remain cognizant of that, especially as, you know, the Bollinger Bands tighten up. Currently, we can clearly see that as of yesterday, this 407.5 level is acting as clear-cut resistance. Anything below that level, the market, we already saw today that any sort of rally or pop in the market was an amazing shorting opportunity. And I hope everyone was basically doing that throughout the day. But then to close the day, obviously, like the last few hours was very just range bound and choppy. But regardless, in my opinion, as long as we remain below 417 to 417.50-ish area, the market is bearish. And there's no real reason to become bullish until there is a change in the Fed's policy, or unless we cross back above 417, very plainly. That is my opinion. We can also see a similar picture playing out on the NASDAQ, where the Bollinger Bands are tightening out, and we're holding this level of support. Similar to the SPY, the NASDAQ's RSI is flattening out, and usually that is that's usually a good indication that there should be a strong move to the downside soon. That is my opinion, especially since the Bollinger Band is getting tight. We're getting closer to this level here, and you can see the lower level of the Bollinger Band is increasing very dramatically. So yesterday, August 22nd, you can see the lower level of the Bollinger Band right here, which is this blue line. All right. Sorry, the blue number right here. Yesterday, that level was 301.59. Today, it sharply raised to 306.47. So that's almost a $5 move in the Bollinger Band. And if we go up another $5 tomorrow, or even $4, we're basically at 310, 311. So the Bollinger Bands are going to be right underneath the entire stock market, or well, the NASDAQ specifically tomorrow. And this is Very, very important, because if we begin falling to the downside, then we would be algorithmically overextended to the downside, and then it would make sense to try to buy some dips. But for now, we have to remain bearish, especially as the SPY and everything has broken down major levels of support. Also, taking a look at the IWM, I want to draw your attention to the RSI here. The RSI moved up just a little bit off of a baby move here in the candles, and we know that that is very, very bearish. That is not a good sign. We don't want to see that. We don't want to see the RSI being this sensitive to a small move upwards, and that's a very, very bad sign. It seems pretty bearish. We could see the lower level of the Bollinger Band is tightening up very fast on the IWM as well. Obviously not as fast as the NASDAQ, but regardless, things are tightening up here. And if these levels of resistance continue to fail, then we can have a dramatic move to the downside either tomorrow or the day after. And especially, it's even more interesting because Thursday we get preliminary GDP numbers. So we're going to get a better gauge of how the economy and everything is doing on Thursday. And that should be pretty turbulent news as well. And Bitcoin, this is not really what we want to see here in terms of technicals. We can see that the MACD worked off of its oversold condition very sharply by remaining in a very, very tight bearish range here. So we were extremely oversold on the MACD. We moved up all the way up, and it looks like tomorrow or the day after we're going crossover. But this was a lot of steam that Bitcoin could not use for its MACD momentum, which is not a good sign. Usually when something is this oversold here on the MACD, the price of the stock skyrockets, because that means that there's a lot of potential momentum to the upside. But the fact that it could not use its potential momentum to break above any major levels of resistance, it's not a good sign. And it's also equally not a good sign that the RSI is doing something very similar. So just keep that in mind. Overall, the market does not seem to be very bullish, obviously, right? But the main things to keep your eyes on is the fact that the Bollinger Bands are moving up this dramatically, very, very sharply. The RSI, the MACD indicators all look pretty bearish. So essentially, it's really tough to say what's going to happen day to day, but it's important to keep all of this in mind. All right, so I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. Today's video was a nice short, so yeah, I will see you guys tomorrow. Thank you so much.